Well, after almost a decade-long slumber, the power sector is suddenly charged up. Call it the mega trend of energy transition or the positive policy action. There's a lot of interest when it comes to the private investment, and all of that is visible in the stock markets as well, with power stocks seeing a lot of interest. But one of the companies that was able to glean into this opportunity of energy transition well ahead of others was JSW Energy, and steering it from the top is, of course, the joint MD and CEO Prashant Jain. Prashant, hi, thanks so much for speaking with ET Now.
Thank you, Anisha. Thanks for having me.
You know, I have to put it on board. I've been meaning to get your time for almost a year. You've always been busy. Tell me what is keeping you busy.
So a lot of action because I think probably after 7-8 years of the almost no growth, we have been seeing a lot of growth in our business. Last 24 months, we have put approximately 32,000 crore rupees on the table, which has been put into the motion, and that's where I have been very, very busy. And apart from that, and now I'm seeing that there is an opportunity that we will continue to grow for next 10 years and probably at more than 20-22% growth rate for next 5, 7, 10 years. So it's a lot of action, and which is keeping me busy.
A lot of action, and that's good kind of action that's keeping you busy as well, and a lot of action happening in the country itself when it comes to the power transition, right? I mean, from the longest time when we were seeing those single-digit growth rates in power demand, we are very close to double-digit now for many months now. The per capita consumption of energy is still very low, and if you go anything by what government is trying to do with the manufacturing push, the demand is just going to accelerate, right? Do you believe this double-digit kind of growth rate can sustain?
That I'm not sure, but typically you have been, I'll give you the idea, like last 2 decades, the power demand elasticity to the GDP has been 1:1. But lot has changed in last 2 decades, like there is a complete electrification which has happened in the entire country. The second is the transmission and distribution losses are behind us, the energy efficiency drive is behind us. All that has eaten out some of the power demand elasticity. So probably I am going to see that 1.2 to 1.25 times of the power demand to GDP elasticity. If GDP is going to grow around 6.5-7% over next 1 decade, then power demand can be there around 8 to 8.5%. But even if you are being very conservative, you will be seeing 6.5-7% power demand as compared to what you saw 5% in last 2 decades.
Yeah, so at least that 5 is going to be at least 8 or 6
Correct.
at least for going forward. But that was the demand side of thing. The other side is supply. That, remember last year we were having the conversation when you told me that the supply is not catching up to the demand. And now we are facing that problem. There's a huge demand-supply mismatch. How long do you see this continuing as well?
It's a big question. So, last month we saw the peak power deficit, which was close to 10.5-11%. The same deficit we saw in 2004-2005. But remember, 2004-2005, our grid was around 75 gigawatt. Today, 200 gigawatt. So the same percentage of the power deficit at 200 gigawatt, you're talking about 20 gigawatt. It's a meaningful thing. India is facing 2 challenges. One is energy transition, second is incremental demand. India is the 3rd largest power market in the world, but the fastest growing in the world. Now, if you are talking about even 7-8% demand growth, you're talking about 17-18 gigawatt, and if you want to meet that by fossil fuel or a balance of thermal plus renewable, we're looking at a huge capital investment which has not happened in this particular sector. So it's a big challenge now. On top of it, you are talking about energy transition.
Yeah.
Now, large corporates, they want to move away from fossil fuel to renewable energy. Second is India is also having set a net zero target. There are the large refinery complexes, industrial complexes who want to set up more and more incremental capacity. All that put together is creating a big challenge in front of us. So enough has not been done in last 1 decade in terms of the capacity addition, because we were steering at some point of time over capacity. But that has got absorbed. But now it's a immediate challenge, and which will get mitigated. But yes, it's going to be a little cold winter for next 3 years, and probably after that it will start easing out, but next 3 to 5 years are going to be a shortage time.
Wow, so 3 to 5 years, because of course overnight you can't put up a power plant or even the renewable energy units as well. But you know, the merchant tariffs as well, as a result of this demand supply mismatch, had shot up quite strongly. Even right now they're very close to 6 to 7 rupees. Do you expect that trend also to continue, and hence merchant sales are likely to kind of benefit?
Yeah, that will remain elevated because, you know, two factors one needs to see. One is the international coal prices have been on a higher side. You know, they went as high as $300 a ton, came down to 100, now again at 130. So international prices are higher. Inflation is high. So the variable cost, fixed cost to produce power is already hardened. You know, and so in such a scenario, merchant tariffs will remain elevated, so for a long period of time.
So merchant tariffs are going to remain elevated, but I just wanted to come back to the point that you were talking about on the supply side. You know, a year ago, maybe the discussion was that India and rest of the companies and corporates as well are moving away from thermal only into renewables or the other forms of you know, hybrid or nuclear, etc. But going forward, there is this incremental need that you will have to depend on thermal as well, because that's your stabilizing part or the large part of the power production as well. What do you see the mix of, let's say, energy and the power you know, generation in India 5 to 10 years from here on? Do you see incremental capacity coming in thermal or not?
No, it is going to come. So today, if you look at, we are around 490 odd gigawatt of the total installed capacity. Of that, around 175 odd gigawatt is approximately renewable and balance is thermal. And CEA has also projected that by 2030 we will be 500 gigawatt of the renewable capacity and 270 gigawatt for thermal capacity. So they have been talking about 40-50 gigawatt of the thermal capacity addition, and I'm sure that is going to take place. So but incrementally more capacity is going to come from the renewable side, which is going to be around 350,000 odd megawatt will be coming in next 7 years time frame from renewable, and only 40-50 gigawatt from thermal. And today, if you look at 25% of your grid energy is from the renewable and 75% is thermal. So by around 7, 8, 10 years down the line, I see it's 50-50. So more capacity of renewable coming in, but short term, yes, some capacities from thermal will be certainly coming.
So when you say 40-50 gigawatt of sorts of thermal capacity might be coming up because it's needed as well, would you be participating in it as well, or your focus is completely into renewables now?
No, we'll be participating because it's like water, where wherever a little bit of more better profits, we would like to be there, but not the substantial capacity. So what you can say that incrementally whatever we are going to put is not going to be 100% of thermal, but
sure,
yes, 10-15% of incremental capacity will be certainly coming in thermal space because we see a good opportunity. Recently, we did one acquisition where we have got a foothold on a pithead plant in the Odisha, where we are located at the mine, where fuel prices are going to be the lowest in the country. And this is a 700 megawatt plant, so this could be an anchor at this location itself. We can add 2,000-3,000, 4,000 megawatt of the thermal capacity without any hesitation, with a lot of land and water and everything available, infrastructure available to us, and then coal price will be the lowest in the country at that particular location. The another piece I see is a thermal power plant where we are having in Rajasthan, which is based on lignite. There is enough lignite is available to double that capacity in time to come. And incidentally, in the last budget session, government of Rajasthan has also talked about that they would like to develop that capacity. The demand is growing. So these are the two places where I see the opportunity that some capacity we will be adding up in thermal space.
So largely brownfield, right? Not looking at maybe bidding for a fresh greenfield or something.
Yeah, it's going to be brownfield, but these will be the new plants, and will be one of the most profitable plants because both are backed by captive coal-like kind of a situation and on the pit head.
So about the 700 megawatt plant, I think one of the units were going to be started in the month of October itself, right?
Yeah.
Is that on track? And I think it was going to, the other was going to be there by March 24. So what's the timeline of commissioning of
So
that?
both are on track. So maybe a couple of days here and there, or 1 or 2 weeks here and there, those kind of bottlenecks can come. Like we have already fired the boiler last week in that unit, and I am getting the feedback every day that things are running pretty good. But there is a bit connectivity thing which is we are trying to sort it out. Otherwise, plant could have started in next 10 days time. So the connectivity which on the transmission side we are sorting out, so it should be up and running in the month of October.
Okay, so next few weeks we'll be waiting back for that big announcement as well. But where would you sell that power from? Because if I understand it right, there's no PPA signed, right? Do you think there's enough demand on the merchant side that you'll be able to run it at a very high PLF?
Yeah, it will run at 104% of PLF.
Wow.
Yeah.
That are
and we are going to sell it in the merchant power because it's a low cost power, and as I said, that the lowest cost fuel cost kind of a situation, because we are directly connected by a railway line and to the mine, and so it's going to be very, very cost economical for us, and we will be running it full in merchant.
Okay, so that's great to hear. At least you're on track when it comes to the Ind Bharat project as well. But what about the other ones? Kutehr as well is something which is likely to come up next year, if I remember it
That's
right.
That's right.
So what's the trajectory there? What kind of incremental revenues or incremental revenue or profits you expect from that?
So this is a PPA backed project. The entire 240 megawatt we have signed up with government of Haryana, and so power will be flown to them, and then we will be getting.
But it's a high cost project for you, right?
No.
I mean, as compared to the rest of the hydro projects, is it coming at a higher cost?
No. So it's coming within the time, within the project cost which we have talked about. So total estimated project cost is around 2,700 crore, and which is approximately 11 crore a megawatt, and power cost will be very, very competitive too, and it will be two-part tariff. We will be getting mid-teen equity IRR as per the regulator, and so it's very, very remunerative project for us as well as Haryana.
Okay, so very remunerative as far as that hydro project is concerned as well. But a lot is in the pipeline when it comes to your renewable, whether it's SECI 9, 10, 12, wind energy, etc. All of those are likely to come within the next 12 to 18 months itself. What beyond that? Because there's a bit of a lack of visibility on your book beyond December 24.
Yeah, so there is a lot of work which is going behind the scene for us. So the day I sign a PPA or I make a bid, I have to build a project in 18 to 24 months time frame. So I have already done a lot of work on that side, but we will be announcing that just shade below the when our book is getting over, because I have to complete it in the next 24 months time frame. So if I sign something today, for example, if I make a bid in SECI and I sign it today, then I have to deliver it in next 18 months time frame, and then I'm already having enough on my plate for next 12 to 14 months time frame. So when you will be reaching around that kind of a time limit, you will be seeing that enough announcements are coming up. We see a strong visibility for our group captive requirement, because JSW Steel and Group is growing very rapidly in terms of their capacity, and so incrementally they are looking for power coming from the renewable resources. In addition to that, there are energy transition requirement also, because they are also looking to reduce their carbon footprint. And lastly, it is more economical for them to source a renewable energy as compared to using the fossil fuel, because entire JSW Steel plant locations are such that they are dependent on imported coal. And today, if you look at, if I give you some color, the variable cost of the the power produced from the imported coal is in the range of around 5 rupees plus the fixed cost. Plus this power tariff is going up every year because of the rupee devaluation, then the railway freight going up, port charges going up, sea freights going up, inflation altogether. So this levelized tariff is going up every year because of this inflation and currency fluctuation. So it's very, very economical for them to go for energy transition. So I see that a majority of my capacity expansion will be coming from the group captive and part will be coming from the third party tenders.
Split it for me. So going forward, what kind of incremental capacity will be coming in on account of group versus third party?
So last 4 years we saw 70% coming from third party, 30% from the group. Maybe next 5 years it will be 50-50 or maybe little shade higher for the group captive, because we see a immediate requirement and rightfully so also, because I am seeing that in terms of the third party tariff bidding, sometimes it is not making sense because of the absence of a discipline which people are demonstrating in the tariff, what they are quoting without application of the thought process that power is a very, very tough subject to maintain the cash flows for a period of 25 years, and then they start making the project at a wrong footing, and then it becomes a bit challenging. So we are very disciplined in that regard, and I don't want to see that JSW Energy get on the wrong side.
No, so it's going to be a, let's say, win for JSW Steel because they're going to get the power from you. It's going to be a lot more dependable, cheaper, etc. But is it going to be a win for you as well in terms of the kind of ROEs and the kind of tariffs you'll be able to garner? Or you've been very, very strong in arm twisting them to get the right rates for yourself?
Not really. It's on the arm's length everywhere.
Okay.
So it is we participate through the competitive bid also. But I see that we are not doing any project if we are not getting mid-teen equity IRR.
Fair.
So this is how I see whether it is a third party contract, whether it is a within the group captive. So everywhere, so I have to be competitive. So the way I see it that my gross block per megawatt is probably the lowest in the country. Okay, my O&M cost is lowest.
Yeah.
My interest cost is lowest in the private sector. So how can I be not the most competitive? The only thing I am trying to do away with is the emotional sentiment or emotional quotient which is attached to a competitive bidding when it is coming to the reverse auction in the SECI bids or third party auction, where I see sometimes, or rather most of the time, people lose the discipline and then they get emotionally caught into the some sort of a something is there,
Yeah.
which happens at the time of the auction, and then people lose the discipline, and which I don't want to lose. And this is where somewhere we have differentiated ourselves as compared to the rest of the players.
Well, fair enough that, that trigger and that ego warfare does pan out in reverse auction. So I understand what you're saying. But, just coming back to the point when you were talking about the merchant sales as well, right now for your entire book, I think 15% is merchant, right? But given the fact it's so lucrative right now, do you have plans to kind of increase that? Is there a possibility to increase the merchant sales? Of course, a leg up will come on account of the 700 megawatt capacity, but anything else that can come up?
So we don't want to design anything based on merchant, because it's not a right thing to do, because power is a highly levered up business, and no bank is going to finance a merchant project, and I would not like to do that way. But if there is an opportunity, why not? So like we had some open capacity which we are capitalizing at this point of time, and then we have an opportunity in terms of the 700 megawatts, so we don't want to sign the PP at this point of time because this was through NCLT. But going forward, most of the projects we would like to be on the on the PPA back. But yes, if I'm building a, for example, 1000 megawatt project, and then I can do a PPA for 700 megawatt and keep
And not the
300 on the merchant, that could be a better strategy than building the entire 1000 megawatt on
I remember a time when everybody was scared of the short term or the open capacities because it was supposed to be 100% PPA, otherwise it used to give you anxiety. But tables have turned. Let's see how long does that continue. But the other thing that you were talking about, that you have your book full right now and you're being very careful as to what you're adding onto the book. So my question is it on account of the funding that you are being a bit more careful about it in terms of whether do you have the balance sheet strength or not to pull it up, or is it also the execution capabilities? What is a big worry for you right now in terms of monitorable as to how to build the book?
It's a combination. So you have to be, like if there is a 40-50 gigawatt of the incremental capacity which will be built every year. Not everything can be very, very remunerative. So we are trying to look at smaller portion of that. So you have to be little disciplined and then watchful about the scenario and situation, not to be every time in the market. Like if you are patient, then you get it. That's one part of it. Second part is also execution. So as I said that, today, the way we are looking, we are here to deploy approximately $2 billion capital every year in terms of the total capital expenditure, which will be funded by both equity and debt put together. And that's what is our size, which we are looking over a period of next 5, 7, 10 years time frame. And because we generate that much of the free cash to be deployed. And execution is also a bit challenging in the country. Like if I am doing approximately 2 gigawatt of renewable capacity every year, I'm talking about 4 acre per megawatt. So 2000 into 4 is 8,000 acre of the land you have to do. If I'm doing 1000 megawatt of approximately a wind every year, you're talking about 1500 kilometer of the transmission line every year. So you can imagine the kind of a right of way, or the land acquisition challenges and various other challenges which are in place in order to demonstrate and also to $2 billion capital expenditure. So it's a combination, and we want to be consistent in terms of the cash flow as well as the execution. And I see that we have built a large capability to do things in-house, because whatever we did in last 3 years, this capital which we deployed, we did everything ourselves. Yeah. We did not do anything EPC. So it was a bit challenging. A lot of my hair turned grey in last 24 months, but and same is with my team. Most of the people lost their hair as well as turned grey. But we build a lot of capability in-house. So we are more matured, more stronger, and we can do much better, and we can do a lot of heavy lifting now going forward.
Yeah, and I'm guessing the new hair growth will be even better than that, as they say it, right? But nonetheless, just funding just a bit more, because you talked about it's going to be a mix of equity, debt, as well as internal accruals. So should I assume that there would be an equity raise in the near future?
Yes, it will be there, because whatever strategy 2.0 we talked about is without any capital raise. So, but we see that we have a opportunity, given the size of opportunity, given the execution capability we are having, and given the position where we are coming at this point of time. We feel that there could be an opportunity to do a capital raise at NEO level, and we would like to do at opportune time at a right valuation, which is accretive to the shareholders, and deploy that for the incremental growth.
Sure. So, and there have been reports going around that JSW NEO, which is there, is looking at a stake sale to the likes of TPG, Blackstone, etc. Could you confirm that you are in talks with them? So,
as I always said, that it is, we don't want to talk about the names and other things, but we are really talking about our strategic intent, that we feel that if there are right partners with us, who are having who understand the power sector well, who are here for a long term and deploying the patient capital. There could be a proposal where we can work together, and as and when anything is materialized, something meaningful happens, we take it to the board decides that way. We will be certainly talking to the investors and media at that point of time. But strategic intent is for sure that we would like to do at some point of time.
And is it likely to happen over the next 6 months? Because the capital markets are ripe right now.
So there is no time frame or a limit we have set up for ourselves, because we
But
have.
could be there.
Yes, but it can be tomorrow. So it depends. So as and when anything materializes, we will certainly talk about it. But yes, what I can say is that yes, there are a lot of interest
Yes.
from the people who want to bank upon our execution capability, our differentiation, what we are putting on the table in this country as compared to the other players. So they want to join hands with us, but we have to take a call with whom and what time, and board will be considering at some point of time.
And how much are you looking to offload? Is it going to be 10-15%? Is it going to be majority? At least some sense as to what size you are looking at.
No, I can
offloading.
understand you are putting the question from different sides, but I cannot talk about anything. But yes, it will be certainly something meaningful,
Okay.
which will help us, because if I am generating internal cash of $300-400 million on my own, and which is going to go up to $500 million. So something small is not going to be a meaningful for me. So it has to be something meaningful.
Okay, and last question on this before I take a break. But one party, or it could be a consortium of investors.
So we have
coming together?
no recipe for anything. It's, as I said, it is strategic,
Okay.
and it has to be well thought through by the board and by which is in the long-term interest of the company and the shareholders. So accordingly, we will be deciding whatever is put on the table.
Any valuation in mind?
No, nothing.
You've got big targets that the board has given you, making the profits 3x, making the operational capacity almost 3x. How are you going to achieve that? What's the roadmap to achieve that by 2030?
So we decided based on the strategy 1.0, we were doing pretty good in terms of the execution. We got satisfied with our development of our capability, as I talked about that. Team worked really very hard, and we realized the size of opportunity is also improving, because not enough execution is being done on the ground by most of the other players. So we realized that we are generating more cash and we can capture a little more. So we upgraded our targets in terms of the execution capability, and we realized other than generation side, there is a huge opportunity which is coming in our way is by pump storage. We have been working on this piece for last 24-30 months time frame, and we saw that it is absolutely on the anvil, and we took a plunge and we decided that in addition to adding another 10 gigawatt of the generating capacity, we will be doing 40 gigawatt hour of the storage also, which will be coming both from BESS as well as PSP. And now team is working round the clock for that, and then we are seeing some bids have already come. We have taken some small plunge in that, and incrementally more bids will be coming. And as I said, that combination will be group captive as well as third party bids, and I'm sure that we will be doing better than what we have guided for. So very soon you will see that strategy 3.0.
Wow.
Once we see that we are doing better in terms of execution on strategy 2.0, then my wish and my target is that I should come out and say that yes, we are doing better than strategy 2.0.
That's great. That's a very confident voice coming in. That strategy 3.0 is coming because people are right now questioning 2.0. So, and you've been delivering ahead of time, whether it's on Mitra acquisition, etc. as well. But just coming back first to the battery storage, because that seems to be the new fad in the town that everybody is talking about. Now, there are two parts of it: BESS, which is battery storage, and PSP, which is your pump storage. Help our viewers understand in terms of why is it critical right now for the country to look at it, what could be the opportunity size of it, and what's JSW Energy doing about it?
So globally, everybody is moving towards energy transition, and India has also set its net zero target, and we are working towards the renewable energy. And renewable energy is not something called green, environment friendly, but also it is economical. So as I was talking that because the coal prices are going up, inflation is catching up, so every year power prices go up. Whereas if you see the levelized tariff today, if I give you a little bit of color that the thermal power prices for the country as a whole, Indian grid is around 4 rupee 50 paisa. Now this 4 rupee 50 paisa is going up by 3-4% every year. So if I calculate the levelized tariff for 25 years is going to be close to 6 rupees.
Wow.
Now if you are looking renewable power today, the tariff is around 2 rupees 75 paisa to 3 rupees on an average, but it is fixed for 25 years. So as compared to 6 rupees, it is 3 rupees. But this power is available only around 30% of the time of the day.
Correct.
Okay. Balance 75% time of the day, it is not there. So this is what is the requirement of the country and the grid, that you need to solve this intermittency problem, which can be solved by a storage solution. Now, if I find out a storage solution which can give me around 2.5-3 rupees, then I will be having a green grid and a green solution, which is renewable power plus storage, but it is same as economical as thermal power on a levelized tariff basis for 25 years. So this is what the whole economics are around. Now, there are the two solutions today which are on the table. One is the BESS, which is the battery. Second is the pump storage solution. Now, both are different in a sense that pump storage is very good longevity, like 100 years,
Okay.
and low cost, but difficult to make, longer gestation period, location specific, it cannot be done at every location, it will be at a particular location.
Okay.
And BESS can be done anywhere in this building, you can set it up. So behind the meter, at the co-location, very quick to produce, very quickly you can do it in the next 6 months, 9 months time frame. So both are different. The life cycle is 12 to 18 years. Cost is higher today. So both are going to coexist, and we see that pump storage is going to be a grid solution, and BESS will be a project or a behind the meter solution. And but incrementally, I will say that 20% or 15 to 20% capacity will be coming up by BESS,
Okay.
and 80-85% will be coming from PSP. Like, today you see the telecom towers, they are putting the DG set. Why they will need to do that? There are lot of buildings where there are the DG sets because of the intermittency of power. They will be moving to the BESS. So there are various applications where people will be doing it. At a particular substation, it will be coming up in form of BESS. The frequency management for the grid will be by BESS, because the discharging rate and charging rate is very high in the BESS as compared to PSP. So both are going to be there, but different application.
Interesting. And you've taken plunge in both of them. So let me start with BESS. What's the timeline of that coming on board? And if I have it right, 60% capacity right now is tied up. What about the rest of the 40%?
So it will be coming up from the date of signing the PPA. It will be 18 months, and we are expecting that soon this PPA will be signed, and then we will be coming. Maybe you can say it's a matter of couple of months within this financial year, and then we will be coming up in 18 months time frame. So I see that by September 25 or June 25 this will be up and running. And the configuration was 60% tied up and 40% was open, but we are going to keep that open. We're looking at the ancillary market at this point of time, and we see a good remunerative
merchant rates
opportunities where we would like to capitalize at this point of time for that BESS opportunity.
Okay, and the PSP one was largely given to PCKL, right? That was
That's
already
right.
tied up. And the
And
timeline
also
of that?
we will so that also is going to be 3.5 years.
Okay. And the financial closure in the PPH sector were pending for
So
that, right?
that's pending. So
Okay.
once PPA is signed, then we will be doing that. So we are expecting that that should also happen sometime this financial year, and then post that 3.5 years it will be taken.
Now I realize why you have been busy. There's a lot happening and a lot,
Yes.
coming towards fruition and, closure soon. But you've also done this tie-ups and the MOUs with a lot of state for battery storage and PSPs, etc., right? If I have it right. What could be the actual opportunity size after these projects are done? Are you looking at some others as well?
I think it's not understood well. We have signed the MOUs not for selling power.
Okay.
These are the MOUs to lock in the resources, which is the location. So these are self-identified PSP projects which we have entered the MOU with the state governments, and then based on that, after that we are now doing the land acquisition, doing the environment and forest clearance and various other connectivity side of it. So that's what it is going on. All these projects will be built we will be participating with the bids which will be coming up by either the SECI or various state governments. These will be connected with the CTU. So any state wants power pump storage project, we will be giving them that
So
particular
do you
capacity.
have any, ROFO or right of first
No.
refusal there? What kind of then
Nothing.
tie-up is this?
Nothing. It's
Just locking in of
it's a
resources.
locking of the resources. So
Okay.
it's like I set up a steel plant, cement plant, or any refinery in any state. But we decide a particular location, then we enter in with the government that we will be creating the investment in the state, doing the jobs and various other things. That's all. We are not taking anything from the state.
Sure.
And we have no obligation to give it back to the state. But yes, if the state is coming out with a bid, we will be certainly participating, and then we will do that. Or if they want to do it on a bilateral basis, we will be happy to do with any state.
Okay. And what is the capex that you've earmarked specially for these storage capacities?
So typically it depends on the type of the project, location specific, anything from 4 crore a megawatt to 5.5 crore per megawatt, and typically 6.5 hour storage to 8 hour storage. So on an average basis, you can say something like $70 per kilowatt hour to $90 per kilowatt hour is the range of capital expenditure you can see.
Now you have this first mover advantage when it comes to these storage solutions, even green hydrogen, etc. for that matter. But there is also a risk, right? Because all of these technologies are developing as we speak. There could be a big disruption that comes. Are you ready for that kind of volatility? Are you being very nimble as to how you go, or how you're looking at managing that?
So we are entering on fully mature technology. Like pump storage is a 100-year-old technology. India is already having pump storages which are operating for last 50 years in this country. Globally, they are operating for last 100 years. But these projects were used for irrigation purpose earlier, and also the management of the water. But now this will be used for a different application. So the application is changed. Same is the lithium-ion battery project. So battery is a very stable technology, very proven technology which is being used, and we are deploying it for the grid stability and grid management, and it's being done very well globally. And so we are not taking any kind of a technology risk. And secondly, we are in the market. If there is any upgradation is coming up in the technology in terms of the battery or other thing, we are sourcing it from the right people, and then we are taking a plunge project per project. So if 2 years down the line a new technology, for example flow batteries comes or sodium ion battery are coming, we will use them, because we are not having any kind of investment baggage. So we are taking a plunge project by project.
Okay, so that was about the pump storage. Are you looking at getting into a lot of backward integration as well? Because with solar, we have seen that you're doing the wafer and the manufacturing cell, etc. Even for this battery, are you looking at doing the backward integration and setting up a battery manufacturing unit at all?
Not really, but yes, JSW Group is having ambition in terms of EV, and in case that is fructifying at some point of time, I see there could be a synergy for the JSW Energy to look at battery manufacturing facility, which will be primarily on the basis of automobile requirement, and that time we would like to evaluate it. But right now, for a supply chain for BESS project, we are not primarily looking at battery manufacturing.
Sure, so that could happen at a future date as and when the group dynamics change. But for EV infrastructure itself, are you doing a lot? Because we're hearing your peers and competitors do a lot in terms of setting up the EV charging infrastructure. Is that something you are getting into as well?
No, we are not. I see there are the huge opportunities everywhere in this
Sure.
particular space, but we don't want to concentrate every space. We want to be very, very focused, and we want to be at the place where there are enough cash returns. So we do not see enough returns for us, and then
Okay.
the size of opportunity is also not that huge, because we believe that most of the charging will be done in this country at the office or at back home when the car is parked, because
That's where you
roads are
spend the
falling
maximum
short
time.
in this country, and you don't have that much of time to charge it at a pump station or a shopping mall.
Fair point taken. But are you looking at some sort of, given the fact you're talking about the group has the ambition of getting into the EV as well, is it going to come your way? Because there have been talks about MG Motors being in the fray, looking at, picking up some stake. Will it happen at the group level, or Energy will be directly involved with that?
No, energy has nothing to do with that. As we have spoken last time also, that JSW Energy is concentrating on the energy side of it, and but group is looking at it, and it will be a separate private company. No listed company is going to be entering into EV business.
Sure. But other than that, you did recently a Mitra acquisition, which has been scaling up well. In fact, if I remember it right, the target was 1250 crore EBITDA this year, 1650 crore next year. On track or better than that also, because you've been beating the targets for us?
Yeah, we'll do better than that.
That's good to hear as well. But any other acquisitions which are lined up in the pipeline?
So again, like we are growth hungry, and we see quite a lot of opportunities in the sector, and I'm seeing that this renewable space is dominated by lot of developers who are backed by financial investors, and their fund life is coming to an end, and I'm seeing enough opportunities are coming in the market for consolidation. And I feel that at a right value, JSW Energy is a buyer, and we continue to evaluate most of the opportunities if they are available on a right valuation for us. So if anything come our way, we will be certainly keen to do that, and we would like to play a dominant role if the valuations are right.
And the hurdle rate will be the same, mid-teen kind of returns is what you're looking at? At least
that's
the target.
That's
right?
the target I have always in mind.
Sure, no, but just in terms of these acquisitions, are these going to be in wind, or you're looking at solar as well? Because right now, if I look at your total share, the pie of solar is what, 20% or less?
Yeah, even lower, but I agree, because primarily solar has been very easy to execute, but very difficult to have the cash flow returns.
Okay.
And because of the competitive landscape, and so we are not fixated with a particular technology. We are fixated toward the cash flow returns.
Sure.
So if we are getting better returns in hydro or pump storage or battery storage or wind, we are moving there. But yes, I am seeing that there will be a lot of hybrid requirement going forward for us, like for our group captive. It's round the clock power mostly, and so it cannot be done with either one technology. So it will be done with a combination of solar, wind, as well as the storage. So we will be playing all three simultaneously in terms of group captive, and for third party, wherever the good returns are there.
Okay. And just wrapping up the conversation with the last few questions, recently we saw GQG getting into the company as an investor. That made quite a few headlines. Are you speaking with any more such investors? And I think the reduction happened from the promoter level, right? Is there something else in the pipeline?
So it's a secondary transaction. So people come and meet the management
Sure.
to understand the business very well. But whatever is done by them is their call, or whatever is done by the promoter is their call. So we are not privy to those kind of a conversations and strategy. But yes, power sector after probably more than a decade is in flavor, and so I am seeing more inquiries by the investors what I've seen in last 5-6 years. So that's for very much I can see that, and people are very keen to meet the management and to understand what is happening in the sector. But whatever is going to be their bet, it depends on their strategy. So it won't be, I don't know about that and won't be in a position to comment about it.
I hope this answers a lot of queries of those investors as well, and you will have to do less meetings. But you know, the analysts are talking about target prices of 500 rupees, 600 rupees, etc. Anything that you track or you're looking at?
So I always track my cash flow and my returns. So that is where I am focused about it, and also I am focused about the execution, whatever we are talking about. And so my focus is continuously on the growth
And the strategy 3.0 that you're going to bring, right?
execution and the cash flow returns. That's what I am focused.
So you have grayed your hair in the last couple of years. What's keeping you sane? You talked about what's keeping you busy. Tell me what is keeping you sane apart from work.
No, it's basically, you know, my thought process have been always that we need to do things little bit innovatively. And sometimes my team members also tell me that I disturb the ship if it is moving in a particular way very smoothly. I come up with a new idea which is innovative, which is changing the complete apple cart. And but that's what is that drives me, and that's what helped me to do the risk management. Because always I have been seeing that the size of opportunity is really good, but you need to really do the risk management very well, and that's where, you know, I'm able to do it so far, and then would like to do it in future.
Okay, you've been making a lot difficult decisions of late. A lot of decisions rather, not difficult, not all of them are difficult. But which was the most difficult decision that you have taken, let's say, in the last 5-6 years? Anything that took a lot of effort to kind of take a call on?
Yeah, one decision was very tough for me personally. We took a decision which was a business decision in 2019 not to do EV. And at that point of time, we were having quite a big team of 50-70 people who joined us from automobile sector. And so that was a very difficult decision for me personally to find out a solution for those people who joined. And then we worked very differently at that point of time to help each one of them. I still remember my HR team created a desk where we worked with the people to help them to find a job, and until they find a job of their liking, they will continue to work within the group with a no question asked. So that was a bit challenging decision and difficult decision, but yes, we found out a very good decision, a solution to that, and then at the end of the day, those people were happy, and then they are still in touch with us and me personally also, and so I feel happy about that.
So we've talked about battery storage, we've talked about renewable and thermal, but you're also getting into green, hydrogen as well as ammonia. Talk to me about what are the levers of growth there or the opportunity size that you see.
So green hydrogen is a new economy. I think it's going to see a big energy transition going forward. So like green power or electricity is a solution for a mobility, which is coming from one side of the hydrocarbon. The second side of the hydrocarbon is coming from the industrial application, for example, is steel making, chemical space, refinery, various other aviation fuel. And these are the opportunities which will be done by the green hydrogen economy. So Green hydrogen will be used as a fuel for steel as well as cement manufacturing. Then if you do the CO2 capture, then it will be making a substrate like methanol, which will be a substrate for aviation fuel, which is putting a foundation of SAF, sustainable aviation fuel, and then bulk chemical space, which will be going for various good application. And that's where I see a huge opportunity going forward, where this green hydrogen economy will be playing a very important role. And that piece where India is going to play a very important role, and so is JSW Energy. We are having a first mover advantage with our first project, which is going on a stream by March 2025, which is going to be used for the green steel manufacturing. And we are seeing the new PLI scheme is also coming up with the green hydrogen, and we are looking to participate in that, and then hopefully we will play an important role.
But could green hydrogen be as big a transition that we saw from thermal to renewable? Do you think it could be that big a macro trend?
Much larger, because you know it's a combination. It's a I will say it's a exponential of that, because to produce green hydrogen you need green energy first, and then green hydrogen. So it's a combination of everything. So very large capital expenditure is going to be deployed for everything, because to produce green hydrogen you need solar, wind, storage, then you produce green hydrogen, then you put another piece of CO2 capture. So it's a large ecosystem which will be created, and I think India is going to see a huge work on that side.
Thank you so much, Prashant, for making time and speaking with ET Now.
Thank you. Thanks for having me.